The global order is shifting, and the implications for investors, I'm very confident, will be massive.
You have factories running on humanoids, not human beings. If you control the world's energy resources, you control the world. Thus, you retain your global hegemonic status. America's objective has always been to dismember Russia, break it up into small parts, and control the natural resources. Part of the big picture of America retaining its hegemonic status is to break up BRICS.
When you say end of the story, what do you mean? It tanks after that?
Everything tanks.
And at that point, is there a new reserve currency?
But what is BRICS doing? BRICS is in the process of linking whatever currency they end up with gold.
I feel inevitably similar forces that drove Trump into power will drive a socialist into power in America in the not too distant future. Do you foresee conflict and military conflict with China and the US at some point?
I think that risk is a very high one.
Hey everyone, this podcast is not investment advice, and I'm certainly not a financial advisor. Just a guy who spends too much time reading about markets. Before investing, do your own research, talk to a licensed advisor, and remember, risk is part of the game. All right, welcome back to another pod. I'm really excited about our guest today. But first, I'll segue into things. Obviously, as everybody's well aware, the global order is shifting, and the implications for investors, I'm very confident, will be massive. The BRICS nations, led by China and joined by major commodity powers, are building what they hope will become a parallel system to the United States, anchored in hard assets and trade independence. But obviously, America isn't standing still. It's countering with energy dominance, technological leadership, and a military-industrial edge that still underpins our global financial system. Question I have, and I think many of you have, is has Trump's foreign policy pushed key nations away from America and perhaps into China's orbit? My guest today has spent nearly 5 decades at the crossroads of these forces. Simon Hunt is a veteran strategist who bridges geopolitics, China's industrial rise, and the global copper trade, among many other things. After spending over 20 years inside China's manufacturing heartland, visiting countless factories and witnessing firsthand, boots-on-the-ground knowledge, how the world's workshop evolved into a global power that it is today. So tonight, I hope to cut through some of the noise we're all hearing, and I want to find out, if we can, how the BRICS ascent and America's response could reshape the global economy and what it will mean for inflation, commodities, and most importantly, our wealth in the years ahead. So Simon, welcome to the pod.
Well, thank you for having me. I'm honored.
Our pleasure. So you spent decades on the ground in China. Most people in the investing world may have visited it, may have spent a few business trips there, but I think you have real boots on the ground knowledge that most don't. And when you were on the ground in China, inside factories, talking to business owners, what did you learn? What's the biggest misconception you think that Western investors may have still about China's economy and its long-term strategy?
I think the biggest misconception is that China produces cheap goods. They do produce cheap goods, but they produce quality goods. And they built probably the world's most effective supply chains. What they produce is everything from low-end goods to high-end goods. They are brilliant at planning. They have produced some of the world's biggest infrastructure projects in times that stun the Western world. What is transforming the world's most efficient, effective, and productive manufacturing supply chains is how they are harnessing artificial intelligence robotics to run their factories. Already you have factories running on humanoids, not human beings. The auto industry is one example. Smartphones is another example. But this is only going to multiply and make China an even more competitive manufacturing industry. Obviously, people in Washington don't like to see what China is doing. And the big question is going to be whether Washington is prepared to compromise its ideals and join the BRICS multilateral world? Or are they going to try to break, first of all, to contain China, and secondly, to break up the BRICS group of nations? So that's where we stand today.
A couple of weeks ago, I think it was a bunch of American executives went to China to observe some of those humanoid-powered manufacturing plants. Apparently, it was all in the dark, so highly efficient, operated by robots. And I think it was the Ford CEO that came back and said, basically, I'm paraphrasing, but if we don't get our act together, American manufacturing is finished after the visit to China. So my question, though, is you mentioned joining or perhaps aligning or participating with the BRICS. Isn't that an impossible task for America, given the world reserve status? How can they even show any support for the BRICS, I guess, conglomerate or group?
They either have the choice of compromising their ideals and joining the multilateral world, or else trying to break it up.
Right.
And so to answer your question, unless the crisis got so deep that Washington had no option but to enjoin themselves with the multilateral world. But before we get to that stage, we have to have that big crisis. And what's going on in Ukraine, with Iran, with Venezuela, with Nigeria, etc., are all just pieces in this big jigsaw puzzle.
When you say pieces in a jigsaw puzzle, I want to dig a little bit deeper on the strategy or the motive behind the participation. Like when I look at, Trump says Nigeria, for example, one example is because of the killing of the Christian. And then Venezuela is, they hate the leadership in Venezuela. But really, Venezuela could be an oil superpower. And then Ukraine is a whole separate thing with Russia. So what are these conflicts really about? To me, I get the sense that it's America flexing its muscle. And I'm not saying that certain things aren't worthy causes, but I get the sense that it's America's agenda to flex its muscle and stay on top. But what's your take on it? What's your take on all these bubbling conflicts?
If you control the world's energy resources, you control the world. Thus, you retain your global hegemonic status. So the real reason for trying to get regime change in Venezuela is the fact that Venezuela owns the world's largest oil reserves. The real reason for threatening to invade Nigeria is Nigeria has large oil reserves. The fact that Christians are being killed is a domestic matter. It's not that the government is killing them. It's a tribal and religious internal war. And it's not only Christians, it's Muslims also. Then if we go to Iran, Israel has its own objectives because Iran stands in the way of Greater Israel. So given the Israeli-American deep alliance, America, if Israel does strike Iran, America will go alongside. But America has a separate reason, and that is they want control of Iran's oil reserves. From conversations that I've had in this part of the world, when I ask the question, who are you going to support, BRICS or America? Because they're playing both sides at the moment. The answer was very simple. If Iran is struck, whoever wins that war. If you assume that Israel/America wins it, then the Gulf goes into the American camp. So you then have the last remaining one, which of course is Russia. And this has gone on for 40, 50 years, that America's objective has always been to dismember Russia, break it up into small parts and control the natural resources. And of course, Russia knows that. They know that Ukraine was just one stepping stone into Russia, which is why Russia is preparing for a long, long war between Russia and NATO. At the moment, that's only over Ukraine. Whether it extends further depends on how America's going to react. Really, that is the big picture. And part of the big picture of America retaining its hegemonic status is to break up BRICS. So they tried to wed Russia away from China. That failed. They are trying to wrest Brazil away from BRICS. We'll see what happens. I think it will fail. Iran, I've just discussed. India, they tried and failed. And now they are trying against China. That was what Trump's meeting with Xi was basically all about, to try to woo him away from Russia. But that will fail. It fails because the real message that came out of the SCO meetings in Tianjin and the follow-up meetings in Beijing is that the major BRICS member countries have all agreed to stand firm against America.
Do you think it's possible in the near term, and by near term I mean, 2 to 3 years, that we'll see a Western nation join the BRICS or try to join the BRICS? It seems like there's been some things bubbling beneath the surface, but do you think it's possible?
I think it's only possible if we have a major crisis.
It seems the West has been great at one thing in recent years, and that's going into further debt. What, if anything, does the West, led by America, still do better than, say, China, for example, who's leading the BRICS? Like, I feel like we're heading toward a financial crisis. Just gut feel and debt levels and, the pain on Main Street. And they seem to be able to keep the house together longer and much better than any expert has predicted. A lot of people have been calling for a financial crisis now for years. But what do you see any clear and present dangers in that regard for Western nations, mainly America?
The future is going to resemble the past. We can continue to kick the can down the road. But your debt levels reach a level where you can no longer kick the can down the road. You're having to borrow money to pay the interest rates on existing debt.
Mm-hmm.
So what these long wave and shorter wave cycles all converge onto the period 2026 to 2030. In that, and I will quote one long wave guy called Samuel Benner in 1875, who created this long cycle of crashes and booms from the 1920s to 2050s. And he's forecasted all of the bubbles and crashes that have existed since then. That's 150 years ago. So he has 2026 as the peak in equity markets, the peak in thus the peak in business activity, and falling markets for the following 6 years. Then you have several other private long-wave experts who also come up with similar but not the same outcomes, all converging in this 2026, 2028, 2030 period. So my take is that we have, from where we are today, we have two likely outcomes. Outcome one is that the global economy continues to slow into around mid next year. It is met by central banks and governments throwing everything into the system, trying to kick the can down the road one last time. What does this create? It creates recovery, yes, but it also creates higher inflation than real GDP growth, thus stagflation. So what does that imply? It implies that inflation rises sharply, not helped by a probable early next year strike on Iran. So oil prices go soaring, not helped by the fact that for various reasons, food prices are going to be rising sharply. And then you have the liquidity being thrown into the system. So by the time we get into second half of 2027, early 2028, we've got US inflation and global inflation between 8 and 12% a year. What does that mean for 10-year plus bond prices? Bond vigilantes will want a return on their investments. So you're going to see bond prices, thus interest rates, not at the 3 or 4% level, but at least 8 and probably double-digit numbers. What does that do to an indebted financial system? It crashes. So that's scenario one. Scenario two is that the existing slowdown goes deeper into recession, right into 2028, which again then causes the big crash. The good news for investors is that under both scenarios, inflation is rising and investors will be looking, how do we hedge a falling dollar and rising inflation? We buy physical assets. So what are those physical assets?
Let's face it, one of the biggest frustrations investors have is taxes. You make the right call on that stock or explosive crypto trade, and then boom, half the gains are taxed. You took the risk in one, but the government takes their share of your gains. That's why I'm excited to introduce our sponsor of the pod today, iTrustCapital, the #1 crypto IRA platform in America. They've built a self-directed IRA platform where you can actually buy and sell crypto, gold, and silver inside a tax-advantaged IRA. Of course, you probably know trades inside an IRA are not taxable events under IRS rules. And I think the best part about iTrustCapital is they use the same institutional-grade custody for crypto that BlackRock relies on. That is peace of mind, and they do it with no monthly fees, just a simple 1% transaction fee. I've spoken with the team and I like these guys. Real US-based customer service, security, and real tax advantages. And while I personally hold exposure to Bitcoin, gold, and silver through ETFs and mining stocks in my own retirement account here in Canada, iTrustCapital gives US investors the ability to hold the actual assets directly in an IRA. You can fund an account with a cash contribution, transfer an existing IRA, or even roll over an old 401k or employer plan to take more control of your future. So if you're looking to protect and grow your retirement with crypto, gold, or silver, check out our custom link in the description below and be sure to use promo code Pinnacle8 to claim your $100 funding bonus when signing up and funding a new IRA plan with at least $1,000. As always, all investments carry risk, and this isn't investment advice. Now, let's get back to the pod.
The easy ones to invest in are equities. So you'll have, after a big correction around middle of next year, second quarter of next year, we then have the final boom in equity prices.
Scenario 1 sure sounds like you want to be in commodities, but scenario 2 sure sounds like the show's over.
Under scenario 2, physical demand for copper by industry will be very weak. But large institutions will be looking for hedges against inflation and a falling dollar. We have the DXY falling from around where we are today, around 100, to close to 50 by the end of 2028. Investors will want to hedge that. They'll want to hedge it with physical things, not just equities. And as we've seen in past inflationary years, they move into base metals. So what industry loses in terms of demand will be made up by the purchases that the financial industry will be making. So on our call, what we see is between now and the middle of next year, copper prices moving from, I think we are around about $10,600 to about $7,000. And then by end of 2027, early 2028, that price doubles to about 14,000.
Wow.
And then that's the end of the story.
When you say end of the story, what do you mean? It tanks after that?
Everything tanks.
So you're essentially in the camp that we're headed for a massive crash within a couple of years, roughly.
Correct.
And It sounds to me almost like an economic depression.
You can call it a depression or a deep recession, yeah?
If in such a scenario, out of all the rubble, is the US dollar still standing?
I said the US dollar index, the DXY, goes from around 100 today to around 50 by the 2020, late 2027, 2028 period.
And at that point, is there a new reserve currency? That's what I want to know.
What is a stable coin? A stable coin is backed by a US Treasury note, which is basically a debt note. A Bitcoin is value. What is the value of a Bitcoin? It's in the imagination. There's nothing really behind it.
An algorithm.
Yeah. But what is an algorithm? Nothing. There's no value. But what is BRICS doing? BRICS is in the process of linking whatever currency they end up with gold.
Mm-hmm.
How are they doing it? They have a gold facility in Hong Kong. The Shanghai Gold Exchange is building or has built a gold vault in Saudi Arabia. So Saudi Arabia has a trade surplus of about 20 billion with China. They are or will hold that with gold in that gold vault in their own country. And that is going to be the foundation of what happens with all the BRICS countries, where one has a surplus with another. That surplus, that intermediary asset is gold in a gold exchange, in a gold vault in that particular country.
Explain the why behind that. To build trust so everybody buys into the whole system, or what's the reasoning behind that?
It's because they want a currency that is backed by something physical. Whereas it seems that G7, led by America, is happy to link whatever is going to be their currency just with paper.
Mm-hmm.
So you've got a real wealth currency versus a paper currency.
So what does that do to the value of gold in the long run then?
Goes up. Don't ask me to what level.
Mm-hmm.
But I think first we're going to continue to see a correction. I think we have the correction down to at least 3,500 and maybe to 3,000. And that lays the foundation for the real push up.
Now you mentioned stablecoins, which is very interesting. To me, it seems like a pretty, I don't know, I would say smart move by the US. Obviously, the Trump admin is pushing these stablecoins. It adds demand for US treasuries over the longer run. Don't you think that could be a saving grace for the US dollar? And yeah, what do you think about that?
I come back. What is the stable coin backed by? It's a piece of debt.
Treasuries. Yeah. So that is where I struggle. There's these moments, like obviously the equity markets, particularly the US equity markets, have been very kind to investors, to put it mildly. And timing the market, I mean, is so difficult. And I still subscribe to the time in the market as opposed to trying to time it. But there has been gut feels that I've had, especially in recent months, where it's like, well, maybe it's time to move to cash. As much as I hate being in cash, and I'm not saying 100% cash, but a significant chunk in cash. But I struggle with that because this bull market essentially has been going for almost 15, 16 years now. And so, and to your point too, I mean, you did reference this. it's so risky to want to move to cash when you know, well, at least I feel very strongly that the next downturn economically is just going to lead to money printing like we've never seen, which, to your point, scenario one in particular, will lead to significant inflation, which will be good for hard assets, which will be likely good for equities as well. So I just feel like it gives me a headache thinking about all these possible scenarios. There's so many balls in the air, but I don't want to get out of the markets. And I certainly don't want to try and time the gold market, but equity markets even, it's like there's so much liquidity in the system right now, and the Fed is done with quantitative tightening. We know the printing press is coming on. We're going into an easy monetary policy era again. I mean, we never really left it. Don't you think that could push these markets for years to come still? Like I wrestle with that because they're going to flood the world with liquidity. Yeah, that's one of the hardest things for me right now is because I've seen what's gone on since 2008, and they're not just going to stop printing. Like there's going to be a massive push of liquidity, and that could probably carry us for another 5-10 years. Who knows? I don't know. That's one of the things I really struggle with because I've seen how the lengths they're willing to go.
What we have sometime in the second quarter of next year is a 20 to 30% correction in global equity markets. What's going to be the catalyst? Who knows? It can be America and Israel hitting Iran, causing oil prices to go above 150. It can be a financial problem. But as I've said before, following that correction, we do have continuing bull market in equities simply because people see rising inflation and how do they hedge it?
Mm-hmm.
So that takes us into 2027, 2028. And after that, you don't want to be the last guy on the dance floor.
And then it always leads me to circle back to what's the next great market to be in. And I always come back to China. And I think the world is totally underexposed to China, the investing world. And at some point, I just feel like China's going to get a re-rate. And some of the major companies in China are going to start being valued more closely to their American peers. Do you see that in the future, where China starts to get similar valuations to, say, it's their U.S. counterparts, the companies out there?
I think that will happen. The question is when, and it comes back to Washington's fear that China becomes the dominant financial power, and therefore America loses its hegemonic status and its ability to rule the world. Thus, I fear, until the big crisis comes, I fear that America is going to continue to do its best to at least contain China. The West's re-rating of China's assets may well be postponed. It comes back to the forces that pushed Trump into the White House, which is not only the Israeli contingent, not only the neocons, but also a large part of the financial community. And the financial community would love to see the relationship between China and America being resolved, because they can foresee that China becomes the dominant force in the world over time, and thus their assets can be re-rated. The problem is that you have that internal conflict within Washington. which of these various parties carries the more weight.
I feel inevitably this similar forces that drove Trump into power will drive a socialist into power in America in the not too distant future. And at that point, it could be 2028. At that point, I feel like that's when China begins to surge ahead. I don't know. It's either
Oh,
that.
I think you are right. It's not just China, it's the BRICS world that will surge ahead post that crisis. And in the meantime, their growth rates are going to be larger than the G7. I mean, there was a report I saw actually early this morning, showing that this year and next, BRICS average GDP will be 3.8 and 3.7 for 2026. G7, 1.8 and 1.2.
What are the main factors behind that discrepancy in GDP growth? Like, why is it just because the West's economy is more mature? I don't necessarily buy that argument. I think the policies of the West, a lot of Western nations are pretty anti-growth. The debt is anti-growth. It's a strain on the system. And the one question I want to ask you about, the demographics, particularly in the West, are quite poor. Families are smaller, there's less children, aging populations, etc. I know China battles with the same issues, but they also have a billion
But
people.
hold on about China. China planned long ago to introduce robots into the manufacturing systems because they knew of the demographic challenges. So they've met it already head on.
When you say long ago, how long ago are we talking? How much foresight did they have on this? 20 years, 10 years, longer than that?
10 years.
Yeah. And what does that do? Like, America's obviously going to have to follow suit. I think they know they're behind in that regard. What does that do to society? And that's why I go to the whole socialist. I feel like there's a socialist wave coming in America because jobs are going to be hard to find. I think the quality of life inevitably will deteriorate. And so at that point, to me, it seems like, China takes the lead. But obviously, America is not just gonna give it to them. Do you foresee, this is what I was hoping to build up to, conflict and military conflict with China and the U.S. at some point?
I think that risk is a very high one. And that is why both Russia and China have been and continue to prepare themselves for a long war with the West led by America.
And you can see the West is building up. NATO's defense budgets are all increasing, which is being pushed by America. I don't know how I'm going to sleep tonight, but I really appreciate you coming on. This has given me a lot to think about. I want to, it really has. And it's exactly what I was expecting. But tell us where our viewers can find you online and learn more about what you do.
Simon-Hunt.com or my email address, simon@shss.com.
And are you still traveling a lot to other countries, or are you more taking it easy these days?
I, having for over 40 years been on an aeroplane at least twice a month. I'm very happy being grounded. Next year, I might make a couple of trips, one of which will be to Moscow.
To Moscow?
Yeah.
Wow. And what is that, a learning expedition?
No, I was in Moscow 10 years ago and loved it and had the pleasure of addressing one of their biggest think tanks.
Wow.
After my address, one of the guys stood up and said, "Mr. Hunt, thank you very much. Will there be war between Russia and America?" I how do I answer that?
Yeah.
So I thought very quickly and said, if the same group of neocons are behind whoever is president, then that will be the ultimate outcome. So,
Oof.
so I think I was right.
Jeez. And again, I'm ignorant. I haven't been to Russia. What's to love about Moscow? What makes it so enjoyable?
Everything works. Everything is clean. The people are lovable. The buildings are beautiful. The art galleries actually tell you. That's how I learned the depth of Russia's religion, is by going around the art galleries.
Interesting. Wow, you've enlightened myself and I'm sure our audience as well, Simon. I really appreciate your time. This has been intellectually stimulating, as I expected it to be. So thank you very much for your time.
Well, thank you. I was honored. Thank you.
Take care.